Hi, everybody. Sean McCracken, news editor for Hotel News Now, here with STR's Jesper Palmqvist. Jesper, another month in Asia Pacific, another exciting month. Hopefully, what's your big takeaway for as we near the end of September here?
Yeah, thanks, Sean. Good to see you again. It's been coming into the end of third quarter is always interesting and exciting, depending on its winter or summer. But yeah, some of the key themes I was thinking about tonight is probably obviously here in Singapore. I'll talk a little bit about Formula One. Events has been a big thing this year, and we had another F1 just this weekend. And I think it's a good time to take stock generally also around what's happening around the region. Who's growing still and who's not, and then we can talk, because this is 24. We can actually talk about deals. Finally,
Yeah.
there's some deals happening before we get into the good stuff.
Yeah, well, absolutely. And everyone knows what that is, but we will get there. Um, so let's start at the beginning. You spent at least part of the weekend enjoying F1 in your home of Singapore. What's the impact of that in a market like Singapore, and what's your general takeaway from it?
Yeah, no, it's a huge impact, and it's interesting. A lot of people forget that actually was a Singapore Grand Prix between, I'm going to say, 1961 to 73, on a totally different track and everything. Not Formula One, but a different Grand Prix, totally loose. And then it was put together again in the mid 2000s and started in 2008. Since then, obviously, big investment by the government and companies here, and hotels pay a levy. So that was a big deal when that started. You pay 20 or 30% or whatever it is when you're close enough to the track. But it contributes, as it does, so much to tourism. And I mean, people watch this all over the world. And seeing that aerial shot over the Marina Bay Sands and everything, it's obviously great. White. So it was another success. It's a good indicator on where we're coming through recovery. Comparing with 18 and 19, and in terms of race weekend, there's a lot of people flying in, high rollers, and people just interested in racing. I mean, race wise, it was a great race. Lando won. I called it, but I think a lot of people did, so I'm not going to call it. But the race itself was less exciting. It was actually the first race ever, well, since 2008, with no safety car. So no crashes or anything. Some close calls.
Yeah.
But so race wise, great weekend, and Lenny Kravitz is still very, very, very cool. And you watched him at the Padang stage. He's 60 and he's awesome.
Yeah.
Hotel-wise, the market, it ended as anticipated. I posted something about this last week. Occupancies, it's interesting because hotel occupancies were higher than 2019, definitely than 23, but higher than peak during the week up until Friday. But then on the big night, Saturday and Sunday, just a little bit softer. So it kind of speaks more about the recovery of weekday more than race almost. So you had a lot of last minute stuff that came in the last 2 weeks, actually, that brought it in. I mean, otherwise, we ended end of August here now, year to date. Singapore's doing reasonably well. It's like 1% up in occupancy, 3 in ADR, and that's despite a lot of new demand. But the only thing people are worried about coming out of F1 and looking into Q4 is rates dropped in July, August. We talked about this before, like 3-4%, and that's not a great end of summer, but it looks stabilized now in September. So cost is still up there. So I think it's a bit of both. There's still a little bit of concern in some areas in Singapore around it, but it was a great weekend.
Yeah. So broadening out a little bit, looking at things a little more regionally, as you mentioned, like a good time to take stock. What are your takeaways so far across Asia Pacific region for 2024? I mean, obviously there's some themes that we've talked about a lot, like, outperformance in Japan. And I wonder, like, how many of those themes that we can pull out are sustainable?
Yeah, no, you're right. And I think we could say that we now established it's more spread than it was earlier. We got 3 buckets. You got the ones that are now year to date on negative growth in the main metrics there, and that is New Zealand and China. New Zealand, we talked about, you're aware of that, and we can dive more into that next time, because I know Matthew's actually in, I think he landed in Christchurch a few hours ago. He's there for an event in Aotearoa. And China is, of course, part of that, the rate pressure that we keep talking about. That continues. And we've
Hmm.
obviously got a big holiday coming up. We just had the Mid-Autumn Festival for mooncakes, and next week is the National Day, so a week-long holiday. So it's going to be
Hmm.
interesting to see what the impact on regional tourism. So that's the negative bucket. The mid one is kind of the low and slow growth, which feels like 2015 to 2018. And there
Hmm.
you have your Maldives, where luxury does well. You got Philippines taking a step back. You got Singapore that I mentioned, and Australia, which is stable, good, and balanced. So you have those two, and then there's more still in the growth bucket. So that would
Yeah.
be a whole bunch of markets. They say Korea domestically, and then powered more by more Chinese going in there for sure. Very strong shapes of the curves I'm looking at in numbers. And out of all the other ones, Vietnam, it moves a little bit now because we're in typhoon season, so a little bit early to say, but it looks like we are seeing some progress now, finally coming back on the resorts, right? On the
Hmm.
coast that Japan, August's a bit slower than average than the total of year, but September was even stronger rate growth.
Yeah.
we forecast that. So Japan just keeps going. Maybe
Hmm.
the markets that are surprising us more is in Indonesia. That is such a big growth area. It doesn't matter
Yeah.
where I look. Wherever we look around that big country, it's way more than Bali, growing definitely a rather rate, and Malaysia as well. And so we're seeing like the markets that hadn't really grown before. Chiang Mai and Thailand is another one. That was the last one that was dependent on Chinese travelers. They have now, in the last couple of months, reclaimed a fair bit. So starting to even things out with other markets as well. September is low season in Phuket in those markets with the rainy season,
Hmm.
but it's looking pretty good. So that's like 6 or 7 growth markets that are in, double year to date, double digit growth in
Yeah.
RevPAR. And I mean, you don't see that around the world everywhere, right? That
Yeah.
still such a growth. So we continue to expect that to slow down, but it's a big spread now, I would say 9 months in.
Yeah. So if we think regionally in terms of those three buckets, are there any markets in your mind that are poised to move from one to another, whether good or bad?
Yeah, I think we're gonna see some of the high end, the high end. I say the growth markets. The last bucket that I mentioned, definitely some that will slow down, and I think Japan will take a little bit of time for that slowdown at a national level because we still see
Hmm.
that rate growth in Tokyo and Osaka and Kyoto to some degree. So that's going to continue a bit. I would expect Indonesia and Malaysia to soften a bit, and Thailand will see something before peak season comes in.
Hmm.
Because growth in peak is always going to be lower than growth in
Yeah.
shoulder and low. You can have more impact. So I
Yeah.
think we'll see percentage game is going to slow down in some of those markets there. Vietnam will keep going for a while because from that lower end for
Hmm.
sure. I think New Zealand and China will take a little bit longer for totally different reasons
Yeah.
there, but take a little bit longer.
It just occurs to me, we're talking about the region in terms of like the demand profile, which I mean is it's
Mm.
obvious why. But when you think about regionally in terms of, kind of the operational environment, do any of the markets stand out to you in that regard?
Well, I mean, broadly speaking, they all suffer from most markets suffer from the same challenge with the labor cost versus total revenues and F&B
Hmm.
labor cost. So it's more similar in terms of the cost revenue balance in many, but I mean, India continues to be a market that stands out again
Yeah.
as a growth market, but also that it's growth in everything, like
Yeah.
every
Yeah.
city, every market. So for me, that's definitely one that stands out when the growth numbers are so strong and
Yeah.
kept going for so long as well. So I think that's probably the one thing that we see, and that's obviously why all the hotel companies want to continue to see if maybe this is the time. India's
Hmm.
big shot.
The interesting thing about India is we've got, obviously I'm dependent on what news filters out from, your region to mine from one side of the world to the other. But there has been more kind of um, news and opinion piece stuff filtering into the US about kind of the work culture in India, and you wonder like how much of an effect that's going to have, whether there is any sort of eventually going to be any sort of like workforce pushback in that country.
Yeah, it's interesting. I actually, every time I go, I ask everyone I meet there, and both in leadership and all kinds of positions and brands, I want to see, well, a couple of things. I want to hear what kind of new brands, what kind of new product, what's happening in India.
Yeah.
Like
Yeah.
exactly to that point in terms of experience and product, because India has done luxury so well for so long, but it was the traditional luxury,
Yeah.
opulence, if you will, right?
Yes.
So, and not
Very
not
opulent.
the yeah, not the trendy or different, like the lifestyle boutique, whatever you insert, right?
Yeah.
So, and I definitely I've seen more. Even before COVID starting, and now we're seeing more brands and more hotels. I think that still takes a bit of time, but
Yeah.
the next generation Indian traveler definitely is the same as everyone else, that looks for more experiences and
Yeah.
looks for something different that is balanced for them as a travel persona.
Yeah.
So it takes a little bit longer because it's to see the impact. I think you need to go in and look at different markets. You could look at Goa as Goa now is getting articles written about it from an over-tourism perspective, right? And the noisy nightclubs, etc. And we all expect that, and that I think that will rebalance itself.
Mm-hmm.
I think India is how the staff ratio per room. That was one of the highest in many parts because of that luxury and perceived luxury. So I think we will see less staff needed, even if there is more staff available potentially compared to other places. So changing that, and the experience of a high-end brand, and also we're seeing so much of the needed rejuvenated mid-scale, upper mid-scale, and the upscale in new brands as well, that it's gone through. And that's a new thing for India in the last 20 years, right?
Yeah. So while we speak about India and brands, obviously the big brand news is, Indian company Oyo buys G6, which owns most notably Motel 6 here in the US.
Right.
Now we've had that covered on our side, and there's a lot of takeaways from it on the Motel 6 side here in the US. But I do wonder, from somebody who's based in the region, what do you make of that deal?
Yeah, it's really, it's obviously, that hasn't happened too much in history, that in the last 10, 20 years, that you have an Asian company buying into another part, right? And they end up with...
here more so Chinese companies, right? We had that spat of Xinjiang, H&A, and Ombang, but that's kind of worked its way through.
That's right. This is before the policies were changed and less foreign investment, right? And take a step back, and it was obviously beyond hotels. This was AMC theaters and Sunseeker and everything else that Wanda bought. But there's a lot of, that's a podcast in itself, those stories, now that the dust has settled. But I think, first of all, for, what was it, $500 million they paid for it?
I'd have to...
500 something mil. For me, it looks like, for me personally, it looks like a good deal. I think it's a great expansion base for a company like Oyo that has done such an interesting journey.
Yeah.
You don't have to go that far back when most of the other hotel companies were going, oh, no, they can't do, this is not working. Like, there's a lot of people back talking around Oyo, right? Did they grow too fast in some countries? Absolutely. It backfired.
Yeah.
And all those leases and paying and, for revenue and everything, it didn't really work out that way. But they were strong enough, and obviously had big backing as they had. And when you think about the growth they've done post-COVID in strategic markets, the product is different. They've gone through a maturity process in 10 years that took some companies 30, 40, 100 years, right?
Yeah.
And for me, that's what's so impressive. And that's where I often draw lines between them and the big Chinese companies that are also Atour and other companies that are between 10 and 15 years old. An extremely quick maturing process, but they get scaled so quickly, they can take a hit, learn from that, and get into a brand and get into new markets. So it's a great, interesting strategic play. It's like in Japan, where they rebranded to Tabist. I think this has great potential. It'll be interesting to see which brands and which sectors and everything once this deal is approved, rolling into 25. So look back a few years, the minor and NH, again, Asia buying into Europe and Latin America, that was a big deal because NH was bigger than minor.
Yeah.
So yeah, I'm looking forward to see how that plays out a bit in the first couple of quarters there.
Yeah. So just to clarify and double check, so it's $525 million deal. I find, from my perspective, somebody who's followed this news stateside for quite a while, it always felt to me, I mean, regardless of where OYO was coming from and how they were positioned in India, it felt like they came into the U.S. with, the SoftBank backing, with the idea to grow like a tech company grows, like they had this big capital backing, and the idea is let's just gobble up market share. Let's use our balance sheet to just gobble up market share as quickly as we can. And I think that it seemed like from an outsider perspective, the lesson learned there is that's a really hard thing to do in a mature industry like the hotels, especially in the U.S. Like this is about as mature of a hotel industry as you're going to get globally, right? So this seems like a more traditional growth play in terms of M&A, but maybe I'm wrong on that.
No, but it certainly feels like it, but it also is a deal that they couldn't have done earlier.
Yeah, absolutely.
Now, because you could look at it from financial backing is one thing, but having the strategic know-how and where their portfolio sits, and in one way, I think they're saved by doing this in the U.S. because China was an example of a market where they went in too big and too heavy and a lot of properties were back branded and everything that didn't work out, like tens of thousands.
Yeah.
So, but that's because in those regional markets, China didn't have the same maturity and third-party management that the U.S. does.
Yeah.
So I think the maturity of the market kind of established and fostered that forward. And obviously there are many markets in Europe where it's growing at a more mature, reasonable pace and getting the right location. So yeah, it's an interesting deal. And I think they have a lot of more respect in the market. And maybe this is the one extra chink in that armor.
I mean, and obviously they're buying a brand that has extraordinary brand recognition, at least stateside now. My one question there becomes, though, I mean, this is a company, I'm not at all saying that G6 is not successful and they don't do well at what they do, but, Accor owned it with the hope of getting that foothold in the U.S. Blackstone bought it with, with the plan to do what Blackstone always does, right? Where they buy it, they shift some things around and they flip it in short order. That was a long hold for Blackstone, which you might indicate that maybe reorganizing Motel 6 into something that it isn't might be a harder thing to do than you might hope.
I think that's fair. And it looks like you can almost compare it to every city has a hotel that has great bones, but never really made it. You know what I mean?
Yeah.
I mean, they exist in Cleveland, Nashville, here in Singapore. And then, but when you look at it, if you know what you're doing, you can definitely flip that hotel around and do well. And I think it's the same with this, the portfolio. So I think what matters is going to be which of these hotels will actually stay in what brand or even in the group. I wouldn't be surprised if these, I think it's about 100,000 rooms, 1,500 G6. So 1,500 hotels. I think there's definitely a place there for some changes before that is fully live.
Yeah. All we know at this point, though, is whatever happens, it'll be interesting to see how the dust settles on
and we haven't seen that many deals. So we're, of course, interested. In Asia Pacific, obviously, Japan and Australia, single assets. But to get something this size, it's been a while.
Absolutely. It gets your blood flowing again to see deals getting done in the hotel industry.
That's right. And you know what, that leads us kind of to what I was thinking about, the overall climate for investment, because with the interest rates and people talking so much about it at every event, and we're sitting okay, which means in theory that there is higher appetite and cost of debt and everything going down, which is why that today, as we speak, it's interesting that the Chinese stimulus package went out. I mean, I don't know what you think, but if you ask 10 financial advisors and banks, you get 5 against 5, almost saying too little too soon, or yeah, it's about time and it can never be too late. But it seems to be positive, but moderately positive is kind of my takeaway.
Yeah, I mean, obviously, we just went through our wave of that in the U.S. last week of people griping about too much too soon or too little not too late. But I want to get your take on how much you think the Chinese moves. Obviously, the big move is cutting interest rates, but there's also some moving around on the real estate rules to kind of open up the market. How impactful do you think this is going to be for hotel investment?
I think the more important impact, which is in my reading of the government's intention, is consumer spending and that part, right?
Yeah.
Because, and I mean, yes, to your point, like is exactly that, moving money around within the state-owned enterprises. You got to make sure, and when so many Chinese have invested in flats and properties that they can't make money out of, you need to make it easier for people to borrow and keep feeding the system. And that's what they're doing. And that confidence piece is so important in a market like China. People do work as a machine, is the collective thinking. There's so much money behind it. So I think there'll be some impact going into Q4 in terms of some spending. When that happens, you'll start seeing and I suppose in one way this cyclical and the cycle and investment and construction and investment in hotels, China had a lot, still has a big supply pipeline, even if it's slowed down. But a market like Chengdu and Chongqing and those markets, that's a reasonably big supply that is still coming. But then there is that gap that is maybe 9 months behind the rest of Asia because it opened later and stood still for longer. So I think there is a breather in there that could help it. I think that's why 25 at the earliest is when we'll see some of that other Chinese more, because there's a lot of Chinese groups of small to medium size that are starting with. So there are things for the big brands to buy.
Yeah.
To look into, but I think it's too early for that now. This is a package that was needed for sure. You can definitely debate if it was enough, but it is a package, at least the 50 basis points, etc. So I think it's about making sure Chinese feel comfortable in spending domestically, but also going abroad for sure, which we continue to see.
Yeah, and which we continue to wait for over here.
Yeah, I mean, and it's interesting because U.S., I mean, the arrivals into U.S. from China, are they growing? Yeah, they're growing. It's just, it was obviously bigger earlier, and now it's dropped down to, was it third or fourth spot after Korea and Japan. So, yeah, U.S. And European capitals, right? So long haul is they need it. But the inbound into China from overseas is definitely growing for sure.
All right. So we are through the opening act now. We are to the main event everyone's been waiting for, which is our monthly footy chat. For those not in the know, Jesper and I's beloved Sydney Swans prevailed over Port Adelaide to earn a spot in the grand final against the Brisbane Lions, which coincidentally, when I recorded this podcast with Matthew Berger a couple months ago now, found out was his team. And last time I recorded it with him. We lost to the Lions. I'm recording with you, Jesper, so I'm taking this as a sign from the universe that we're going to win this time.
I think that sounds like a great plan. And listen, listen. If you're not into AFL, Aussie Rules football, footy, it's a great game, and it's been a really interesting season where Swans have played really well, and then they had this big downer, came back, and the win against the crosstown rivals was an epic last minute one, and then the way the preliminary final there against Adelaide was amazing. So I mean, Lions, Matthew's got tickets. That's the last I heard, because it's a ballot.
Yeah.
My brother in Sydney got tickets, and Matthew's got tickets. I looked at flight prices straight away to fly down to Melbourne. Still one of those, and it was outrageous.
Yeah, I
So
imagine.
I may have to watch it live on TV instead. The central Melbourne is 70% already. This from last week for this Friday, Saturday. I expect that to go up. It's going to be crazy busy city. Listen, the MCG is one of the greatest stadiums in the world, and Swans have, and I mean for a lot of the players now, this is it, right? The rematch. Yeah. Since the last grand final loss, I'm feeling quite quietly confident because, I mean, these are the two best teams. So we looked at it. Matthew, we all agree on that with Matthew, that the Lions and the Swans are the best two teams. So let's listen. It's going to be a tough wait until Saturday, but come on, Swans.
I do feel like, despite the fact that the Swans were in the midst of their slide the last time they played, it was clear that these were the two teams, right? It felt like that sort of matchup. It had that sort of gravity. So hopefully they can play up to the moment this weekend.
Exactly. And, you saw the difference, but if they get a slow start, that's when we start to get nervous, which they did. Last weekend, they didn't get a slow start. They were out there and they played straight away.
Wow, that's the story of the season, though, right? Like, how many first quarters did they actually win through the course of the entire season? It was, for as dominant of a team they were, it feels like they don't start until 20 minutes in.
Exactly. Yeah.
So
it's been a hell of a season, and hopefully you guys, I don't know what time that'll be on for you guys over in the US, but
you know what? Before we end this, I'm going to look it up, because that's the fun part of, for anybody, I've mentioned this before, but for anybody who hasn't been listening, this is, we in our office here in Cleveland decided to get really into AFL and footy in general, like the end of last season. So this is the first full season that I'm really like dedicated to it. And that was like the learning curve, is the timing of these matches is sometimes wild.
That's right.
Like,
well, welcome
4:30
aboard.
in the morning.
This is it. Yeah. So I think it should be just around midnight, just before midnight, I would say.
12:30 a.m. Saturday my time. So that would be a little bit later in the day for you guys, obviously.
For me, in Singapore, it's perfect. It's a lunch footy game, so that's beautiful.
Yeah, I'm looking forward to it. It should be fun.
Absolutely. Yeah, let's go.
So Jesper, any final words of wisdom, hotel, footy, F1 related, any of it?
Well, I think we're again, like we said, with all these events, if it's motorsports or footy, whatever it is, it's a year where events build up a lot of attention, and how I think the trend was this year that people stayed more than one night, kind of like business travel.
Yeah.
So let's see if Melbourne capitalizes off that as well during the whole weekend coming into springtime. Hopefully we get some nice weather. But things are looking okay. And in those water buckets, I look forward to see what happens, and we'll maybe get some Matthew on and to debate this next time.
Yes, hopefully that's for us to gloat, not to eat.
That's right.
But we'll see.
And I hope so too. Yeah.
All right. Well, thanks, Jesper. I appreciate you taking the time.
Thank you, Sean.
Hi, I'm Isaac Colazo, Vice President of Analytics at STR.
Hi, and I'm Jan Freitag, National Director for Hospitality Analytics for the CoStar Group. Tune in to our new show, Tell Me More, a hospitality data podcast.
It's a podcast on the global hotel industry, its current trends, what we're thinking about, and where the industry's going.
And we like to have fun with the data too. Find us on hotelnewsnow.com or wherever you listen to podcasts. Subscribe today.
This episode of the Hotel News Now podcast was recorded on September 24th, 2024, and edited by me, Sean McCracken. Come back to hotelnewsnow.com every day for the latest hotel industry news. Thanks for listening.